Let's talk about inflation because it continues to cool. The headline consumer CPI for the month of April came in at a 12-month rate of only 2.3%. That was below the estimate of 2.4%. And what I love, this was the lowest reading since February of 2021. I mean, that was a phenomenal number. I was so happy to see that. I hope the Fed saw it.
Yeah, and I mean, we'll see what the PCE looks like later this month. My guess is that should be right around that 2% level. And again, they look more at the core, which core CPI was a little bit higher than the headline. Core, again, excludes food and energy, and that came in at 2.8%, which did match expectations and was in line with March's reading. So we didn't see that pullback I was hoping for. But again, at 2.8%, it's not that 2% level, but also, is it really that problematic? I don't think so.
You know, and somebody said a long time to me, which makes sense. They go, I don't understand why they take out food and energy because they're two important things. The reason why they do take them out because it's so volatile, which energy was a major help in the headline as it fell 3.7% compared to last year. With gasoline, that was down, and we've seen gas prices fall, except for here in California, fall by 11.8% over the past year. That's a huge decline. I mean, that really helps out your pocketbook.
You know, we were doing some reading and did some posts on this, and I'm like, yeah, this is great. And I hadn't been to the gas station in a little bit, and by a little bit, I think it was like a week and a half or 2 weeks, and I went to go fill up, and I was like, I thought gasoline was down. So if you're watching this in Texas, you know, give us a little sympathy here because it's no fun in terms of the gas prices. But back to the inflation report, one thing that, you know, is obvious is the tariffs weren't really part of this April CPI. And again, even though we are starting to get some negotiations working through, I mean, you still have a 10% baseline. Again, we talked about the 30% tariff. So there are economists that are worried about future months. And there's one gentleman, his name is Joseph Gagnon from the Peterson Institute for International Economics. And he said he believes a 10% average tariff rate would add as much as 1 percentage point to the CPI after about 6 to 9 months. And I think that when we look at this, I think you will see obviously CPI increase because you have an increase in prices. Well, somebody's going to pay for it. But we've talked about this a lot. It's not just the consumer that is going to absorb the full tariff.
Yeah, and that's the thing that we try to explain to people. It's not just a consumer. You've got the manufacturer. You've got the distributor. You've got the market. I mean, you've got so many hands involved in that. If they all take a little bit off the table, maybe the consumer gets hit with not a 10% increase, maybe a 1% increase. And actually, Walmart, they reported earnings, and I know that they said that they were raising prices on some items, and we talked about this as well, raising prices on some items that had no tariff effect, but because there was such high demand, they could raise the prices, and they didn't raise the prices on some companies or some products that had the tariffs on them.
Well, it's interesting. I don't know if you saw this. There was an ex-Walmart CEO, and he's like, well, if you actually look at their bottom line, essentially, their margin expanded.
Oh,
so he's
really?
like, they could absorb more of the tariff.
Yeah.
You know? I mean, and that's the thing. And, you know, when you look at this too, you talk about the manufacturer, you talk about the distributor, but I mean, you have to think again along the supply chain. And sometimes there's not just one manufacturer, like obviously with Apple, with their phone, well, they're using several manufacturers and then one company to essentially assemble the phone and then move it over. So there's several manufacturers essentially that can absorb part of that tariff. And then you even look at the transportation company, right? You ship it, let's say, across the world. And then you have the FedEx or the UPS or somebody there that is now going to transport it here. There are so many different places that can absorb these tariffs, so it's not just a huge hit to the consumer. And the reason the companies will do this is because they still want to fight for market share. So I'm going to use your Walmart example, right? Well, if Walmart raises prices on something, Target might be like, hey, we could actually steal some market share back. We're not going to increase our prices there. That competition is what really generates such a robust and strong economy here in the U.S.
And you bring up a very good point about so many people in manufacturing, because we'll just say like an Apple or a computer. They got to get the chips, they've got to get the wires, they've got to get all these different things that are manufactured by other people to pull it in. So they say, hey, you know, you're charging us, you know, $500,000 for this. We need you to reduce the price down to $450. Okay, we'll still make a profit. So there's so many manufacturers in there. And again, a great point you brought up to transportation, because it's not just one shipping company. It's a shipping company. It could be a trucking company. Then the Federal Express does that. I mean, there's so many factors into that. And that's what I don't think people understand, how many people, if they just reduced a little bit, maybe they're not an increase.
And I want to be very clear. I still think consumer prices will go up on net a little bit. Yeah. This is not going to reduce consumer prices. There will still be an increase, but don't think it's going to be a dollar for dollar or percentage for percentage increase to the consumer. And I got to say, I saw consumer sentiment came out again, and I've railed so hard against this report. I just think it's ludicrous, frankly, that we even look at this. But consumer sentiment, I think, came out on Friday, and people are now looking for like a 1-year inflation rate close to 7%. I do not think we're going to get to that.
Wait,
I mean, it's just crazy.
Who said 7%?
The consumer sentiment data. Consumers.
You know, I heard that this morning, and I thought, well,
I didn't even write a post about it because I was like, this is just ridiculous.
Way out of whack, yeah.
And I know Scott Bessent, the Treasury Secretary, he almost said, it's like, you know, I've learned a long time in this business. I don't even look at soft data anymore. It's all about the hard data. Because why are we listening to consumers that don't know anything about inflation? And I mean, that was just crazy to me that they thought it was going to be that high. And I think the 5-year inflation rate was something like 4.8%.
Yeah.
I mean, essentially double where we are now.
And again, there's many consumers that, again, that's why we do our show, and that's why we give you this information, that they talk emotionally. Like, oh, you know, inflation's up. It's going to go to 7%. Like, well, why? You have no data to back that up. And we again, explain very well why that won't happen. But it just sometimes they take that, I guess it's called soft data.
Soft data. Yeah, that's kind of the surveys and talking to people where the hard data is going to be, again, your CPI report. It's going to be your jobs report. It's going to be the retail sales. It's actual data that's coming in.
And I think some of that soft data is good on how people feel. But when it comes to asking them about inflation, no, they don't. That's I don't think.
Well, how good is it though when we talk about how do people feel, but then they still go to Padres games and spend a ton of money? You know, it's not really a true indicator of people's actions at times.
Trying to be nice to consumers.